I was buying this stock yesterday. The ticker is GEOS. Like, okay. It's space, you know, like I was buying space. So when I buy space, okay? Now, how long have we owned space for recently? Can you look that up?
I can look that up. It's a long time.
What is the return on space for people who allocate their assets the way that my family does in ETFs, in ETF Pro and/or Portfolio Solutions? So the point here on the lesson is, I don't just own that publicly and personally, right? I own components of it or components that could be components of it, right? So all you have to do is get your machines to tag the word space into any ticker. This is how I roll when you're not watching, right? So I end up with this ticker. I got a lot of tickers for this one. Okay, I got GEOS. You know, the name of the company is Geospace, right? Space, Geospace. See that? This is really sophisticated type stuff. I spent 25 years learning how to be a stock picker, and this is how I reduce myself, right? But here I am, and then I say, okay. Now, there's 3 boxes to check. 1, does it have the factor exposure? Factor exposure, which is what we just reviewed. Is it space? Well, if it's good enough to put it in the name, we would assume that it is, okay? So we get the factor exposure. 2, what do you think I'm looking for here? Signal, right? Is it bullish trade and trend? Yes. 3, the only thing I need left, the only thing I need, 0.3, is the low end of the risk range, which my fancy computers tell me there are other space stocks that I don't need to review. I don't know anything about what this company does other than it says space. Yeah, people are like, you. Now, I know what I'm doing. I'm doing what the machine's going to do. I am front running that there will be more market cap and more asset allocation going to space as a theme until it breaks trade and trend momentum.
And you've owned space since 522 in Portfolio Solutions for a 38.6% return.
This was coming out of a market crash. Anything we bought in May, we didn't own from February to April. So if you want to really be hated like the way that I get hated, you got to be good. This is good, right? You tell me how many people bought space in May and were not long it from February to April. I bet you the list is a lot shorter than you'd think. Now, we have a very good way to allocate capital. Now, when you start thinking about single stock picks, let's go off for a little bit more here. Now, what is the capital, okay? What is the percent of your hard-earned capital that you're going to allocate to this? What is my minimum and what is my max, Rooster? It's an equity.
Your minimum's probably around 2%.
2% is my min.
Max, I'm going to say 5. I don't know if that's
6.
right, though.
But it could be, you're thinking beta adjusted, so 5% is closer to 6 on a higher beta position like this. That's 2 to 6% of my family's hard-earned capital. When I talk about a stock that I've done literally 0 research on, 0, the max position on this is going to be 50 basis points to 100 basis points, and I start at 25. So I think on this one I'm at 50 because I bought it twice. Right? 25 beeps. That's it. Now, 25 basis points for everyone is different. Let's use like a $3 million account. Let's say you have $3 million bucks. You've worked your whole life for $3 million, right? 25 basis points of $3 million is around 7,500 bucks, right? So if you had a $3 million account, you currently have a $15,000 position in a company that you don't know. I'd be totally comfortable with that, and my PA is bigger than that by a lot, right? Because it's just basis points of capital of risk. That's it. I don't think about the dollars. Never have, never will. I shouldn't say never have. I did. When I started making money for that hedge fund in 2000, 2001, 2002, 2003, the early mistakes I made was thinking in dollars. Holy shit, he just bought $56 million worth of what I just said. So I had to stop thinking about that. So that's why I changed. The reason why I do things are all a function of my experience. Right. So don't think about how much money it is. Think about basis points of capital at risk. You can put a lot more capital at risk in an ETF than you should in a single stock pick that's just a factor, a signal, and a risk range. Okay? Or at least that's how I think about it. right? My bigger positions, my higher asset allocation should be to lower beta positions and or more research has been done, right? Or both.
Thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.